And good afternoon, everyone. My name is Russell Rivera, founder and president of Voice Wealth Management. And welcome back to Discuss with Russ. This is episode 5. I am a chartered financial analyst and certified financial planner. And Voice Wealth Management primarily helps entrepreneurs, young professionals, and their families get the most out of their money. I consider myself a personal CFO and financial therapist. The reason being that we all know how emotional money can be, and helping my clients manage the emotions of dealing with their money is a large part of what I do. Through short-term and long-term planning, it's our goal to help everyone get the most value for every dollar they earn and use. The Discuss with Russ series is focused on helping you get through the crisis, not just start thinking and planning for what the world might look like after the crisis is over. Not just once we can leave our homes and see others face to face again, but to anticipate possible responses in society's behavior so you can be most prepared to succeed. I'm happy to be joined today by two panelists, Josue Rivera of Rivera and Montes and Jeb Singer. Our first guest I'm going to introduce is Jeb. Jeb Singer is a business attorney in Manhattan with a specialization in bankruptcy law. A cum laude graduate of Brooklyn Law School and a graduate of the University of Michigan, Jeb regularly counsels small and medium-sized businesses on everything from entity selection and formation to day-to-day business issues to sales or mergers of the businesses. Jeb regularly counsels individuals and entities on debt restructuring matters, including representing corporate and individual debtors in bankruptcy. A diehard fitness enthusiast, Jeb is also the co-founder of Fix New York, a new fitness recovery and wellness studio in the heart of Chelsea and Manhattan. And in his spare time, when not training for or competing in marathons or triathlons, Jeb is busy spending time with his wife and 2 young children. Also joining us is Josue Rivera, partner at Rivera and Montes. He has over 22 years of professional experience in domestic and international tax services, working with multinational companies and family-owned businesses, providing advice on corporate tax planning, financial wealth, and individual tax requirements. With Rivera and Montes, he focuses on advising small and medium-sized businesses with accounting, business, tax strategy, and implementation. He has a bachelor's degree in business administration with a major in accounting, magna cum laude, and a Juris Doctorate from the University of Puerto Rico. Jeb, Josue, thanks for joining us this afternoon. How are you?
Good to be here.
Great. So,
Thank you for the invite, Russell.
Absolutely. Glad to have you. We're now in the round 2 of PPP, and that's what a lot of people are here for, is what is this program and what is it and how can it help people? So before we sort of talk about where it is, I want to ask, what exactly is the Payroll Protection Program? And Josue, let's start with you. Sorry, I know we weren't ready for this, but let's take it back to the beginning so everybody knows where we're coming from.
Yes, thank you, Russell. So what is the Paycheck Protection Program? This is a vehicle that the federal government has put in the CARES Act to provide funds to medium and small-sized businesses that fit the criteria of having less than 500 employees, where they were going to provide financial liquidity, immediate liquidity, to the extent that they could prove that they need those funds. What was going to be the matrix? It's the federal government require you to come back and calculate how much was average compensation for the past 12 months. You come up with an average monthly payroll cost, and then you multiply that payroll cost by 2.5, and that's the maximum amount of the loan that the federal government was going to give to you. There were some strings attached to that. You needed to you needed to use it for payroll costs and for some other permitted use that is in the legislation in order for you to get that loan forgiven by the federal government, which is, I think that based on that brief intro, and now that people are started to having access to those funds, we're having a lot more discussion and now on how we're going to get those loans forgiven. But I think that in a nutshell, that's a big summary, a good summary to help us set up the stage for what we're going to be talking about in the next hour.
Excuse me about that. Sorry about that. But Jeb, I know that you've told me that through your business, you've been able to get some money. What about your other clients, the small business independent contractor clients? Has this round been a little bit better for making sure people are getting money, and who still isn't getting money at this point?
Hi, Russ. Thanks again for having me on here. The answer to your question is yes, this round has been better for all people, but there's still a concern that the more well-connected you are and the larger the small business, the better chance you have of getting the money. I will just tell you quickly, anecdotally, that it was a minor miracle that I was able to get the money. I was shut out of the first round, and my application wasn't even reviewed. And I went to a small bank with whom I had a previous relationship. They're my equipment lender. I have some heavy duty equipment, and they answer my calls. I have their cell phone number. I text with them. I get really good customer service, and they still weren't able to get my application looked at. And then they told me in the second round that the applications were closed. So we thought we were done. Then about 5 hours later, our personal banker, or she treats us like a personal banker. I mean, she really treats us like family. In fact, I should name the bank, Stearns Bank out of Minnesota. They're a wonderful bank, especially now that they got me the loan. She then basically said, I got you pushed through, your application's getting reviewed. And from that point on, it was rather smooth. That being said, I would say that a small portion of the initial applicants, maybe 25% of the people that I know got funded in the first round. And I would say that it's been flipped to like 75% in the second round, and that it still is, the likelihood of funding is still somewhat proportionate to the size of your business, and independent contractors are having more trouble getting funded than larger corporations.
So a lot of the people I've spoken with,
I'm sorry. Yes.
Go ahead.
Corporations. Okay.
So a lot of the people I've talked with have even still had confusion about how to apply. The government basically went, here's $500 billion, go. And so the processes of having this happen, I think they've now for round two kind of been worked out. And while there is still little money left, it sounds like not a lot. If there's anybody who still needs to apply, what's the checklist of things they need to do so that they can get their application looked at really quickly and hopefully get in under the wire here?
Okay, the first thing, I think they need to understand that you can't just apply for this thing directly through the federal government. You have to apply through a bank or other funding institution, such as we've talked when we had a conversation the other night about Fundera, Funding Circle. PayPal is one where a lot of people were able to get some money, but they have to really take seriously the document requests from that company. Now, in terms of what those document requests are, some of them are predictable. They are payroll records, payroll tax records. I believe there were bank statements. Sometimes they might require corporate governance documents such as operating agreements or stockholder agreements. It really depends on what your banker tells you. There's no one set stack of documents that are required.
And Josue, I've been even hearing from other people I've talked to who are trying to do this, that it might be independent contractors. Should people have also already filed their taxes?
So, good question. Another thing I think I wanted to add to Jeff's question was there's no set of rules. Of different banks are requesting different things. I think that the mandate from the federal government was to the extent that the borrowers, right, us, the small businesses, show you in good faith that they need the money, they provide the payroll documents, there should not be too much of a pushback from the banks. That's not their job. us requesting those funds. We need to certify that we need those funds and that we are certifying that we're going to use them for the intended purposes. So that's to the extent, what the SBA is requesting the banks to do. And then they're requesting us, then we're going to be held accountable that those funds are really used for the intended purposes.
And so,
In
like you
terms
said,
of,
I'm sorry, go ahead, Sway. Continue.
no, I was now going to address the question, but if you want to ask
Well,
another
no, I
comment.
was going to say, realistically, I was going to say in terms of, well, if you were going to address the question, I'm sorry, go ahead, address the question.
No, you were asking about the sole proprietorships and self-contractors where they don't really have a payroll. They just file their tax returns using what we call the accountants a Schedule C, right? Where they show their income and expenses, and then the net profit is really what they take home and they pay taxes on, including self-employment taxes. So this program, the PPP, also includes those kind of taxpayers where the federal governments have tell them, hey, you can actually go in and apply for this. What they requested is two things, right? You have to come up with a Schedule C. So if you have not filed your 19 return, which by the way has been automatically extended to July 15th. So if you haven't filed your return, you still can request the loan. You have to come up with a pro forma Schedule C and file it with the federal government and show it, to your bank so that they can come up with how much is going to be the maximum amount of a loan that they will provide to the sole proprietorships and self-contractors.
Thank you. That was really clear and hopefully very helpful. If you, by the way, for everybody on the call, if you do have questions, you do have the Q&A button at the bottom of the screen. We're going to be doing that. And also we're going to send out a little poll that we set up, just asking you what you think about, whether or not you've applied and where you are in this process if you're doing it at all. So we've just set that up for you and sent that out. And I'd almost forgotten that we had it because we set it up a couple of days ago. So as some of these businesses, right, like in my neighborhood, I'm starting to see more restaurants come back and at least try to open to do takeout orders. Other stores are trying to come back in my neighborhood. What documentation, maybe they got loans, maybe they didn't, I'm not sure. But what documentation responsibilities, you were mentioning, Josue, are they going to need to have in order to get these loans turned into grants? You mentioned something about payroll records, and I remember at some point, Steve Mnuchin, the Treasury Secretary, saying something about audits.
Yes, first of all, let's talk about how they need to spend this money, right? 75% of the loan, if you want it forgiven, must, and I repeat, must be used in payroll costs. The other remaining 25% could be used in permitted expenses, such as lease expenses, interest on mortgage obligations, utilities payment. And utilities, by utilities, there's some leeway. I was a little surprised of what they were referring to as utilities. They do provide for internet costs as being utility. And telephone costs, transportation, it's included in the law. What does that mean? Honestly, I don't know so far, but it's in the law. And also the more traditional utilities, right, such as water and electricity and power and whatnot. So to the extent that you spend at least 75% of your payroll cost, right, and the first payroll cost, what you spend in the first 8 weeks since you obtained the loan will be forgiven. To the extent that you meet other requirements, meaning the employee retention, you need to keep your employees based on some baseline periods that the law provides, and also that you don't lower the employees' salaries by a certain amount. They cannot go down by more than 75%. To the extent that you meet those requirements, the money that you spend in the first 8 weeks will be completely forgiven. What are the records? Payroll records, right? We need to show the federal government and the bank. First of all, the bank, because the bank is going to be the intermediary between the SBA and us to tell the SBA, hey, these guys met the criteria for the funds to be forgiven, so we're going to forgive the loan. The SBA is not requiring the banks to make a full-blown audit of whether the person that actually borrowed the money actually spends the money on what they were supposed to. We are going to be certifying too that, hey, the information that we're providing you, bank, is accurate and we're giving you in good faith and it's true and correct. And then that's really based on what I've heard. And I would love to hear Jeff's comments on this too, that, hey, to the extent that the bank does that due diligence, they should be able to forgive the loan, and then that should be it. Then I'm sure that there would be at some point some fiscalization of how these funds were used. It will be very interesting to see how that comes. I know that probably it's not going to be in the immediate future. I think everyone is overwhelmed. We just want to get through the crisis, but I'm sure also that unfortunately there's going to be people that take advantage of the program, and I'm sure that at some point there's going to be some sort of fiscalization that the funds were actually used as they were intended to.
Jeb, what are you doing?
What am I doing?
Yeah, I mean, in terms
I'm
of,
here.
Jose asked for your comments, and then also like kind of what are you doing in terms of making sure that you get that loan forgiven?
Yeah, I mean, I'm here. I'm here with you, but the truth is that if you read the language, especially in the PPP guidelines, it's not smart, and I would never advise clients to spend money for things outside of these limited classes of I'm going to read them right now: payroll costs, costs related to the continuation of healthcare plans, mortgage interest, rent payments. This is one people don't talk about very much: interest on other debt obligations that were incurred, or this other one's refinancing an SBA loan. And it says if you use PPP funds for unauthorized purposes, SBA will direct you to repay those amounts, and you will be subject to additional liability, such as charges for frauds. If one of your shareholders, members, or partners uses it for unauthorized purposes, the SBA will have personal recourse against the shareholder, member, or partner for the use. So that's some pretty strong language. I think that's really important because a lot of these businesses, a lot of these small businesses, if they were to go out and get a small business loan from the banks, from a bank, they could probably do it, or they may be able to do it, but they would require a shareholder, member, or partner to personally guarantee that loan. And one of the advantages of the SBA loan, even if it's not forgiven, is that there is no personal recourse against an individual. So this sort of creates personal recourse where none previously existed, and I think that's actually something that from a lawyer's perspective and a business owner's perspective, you don't want to incur personal liability, but that's not discussed a whole lot.
Sure. We just have a question here that I think is interesting for both of you. What do you think a business should do if their economic situation approves after approval but before funding? Would the business options differ if they still met requirements, even though their situation has improved? I assume is the question.
My answer to that, I would make a couple of points here. The first thing is, between approval and funding is supposed to be 2 or 3 days. So you're not really going to have the economic situation improve in that short amount of time. It's unlikely. However, what if it's the case that you were in a business that has gone from like non-essential, unessential to essential during those two days, or during, even if let's say it's a week and a half later, and you're able to reopen and business is okay. I would give an example is some of the medical practices like chiropractors, which have a fundamentally strong business, but they don't have I happen to know this because we happen to have chiropractors in our studio. Unless it's emergency chiropractic care, they're non-essential. I would say you have to think seriously about repaying that loan, or you could just continue to pay your payroll. Make sure that you're documenting and then get it forgiven at the end. So I would probably do the latter. The reason you would do the former is because there are so many strings attached to this money. It's not as if you could use this money to pay an owner or pay marketing expenses or do something of that nature. So those are the two options that I see. But this is really a fascinating question.
Yeah.
Go ahead.
I mean, if I have a point, I think that you will have to find what do you mean by doing better, right? Because I think that you should take, I mean, being an accountant, a CPA, right? Let's compare your revenues at this point last year versus your revenues at this point this year. If they're lower, then I think you have a point. Hey, this thing is affecting me, right? So, I hope that's the hope. I think the hope about all this is that we're going to go to a new normal, right? We're going to get slow, but surely get to normal. I agree with Jeb. Things don't spike all of a sudden, right? So if you're doing better in a matter of 2-3 days, your business should not be soaring. But I think that, hey, at the end of the day, it's just sit down and make sure that consciously you can say, hey, listen, this thing is impacting me year over year. I mean, I'm not making the same amount of money. Then we have an argument that at least we could try and sell to the federal government and to the bank. But again, but having said that, please document everything and spend the money as it is intended to be.
And didn't we, wasn't there some article today about, like, if you did feel that it was appropriate to return the loan, that they actually extended the deadline to do it? It was supposed to be tomorrow, and it looks like it's now been extended another week, correct?
It has. And hey, kudos to Russell. He alerted us right before we started. Like, you guys saw that
Or am I getting cut out?
That the federal government gave another week to pay those loans. And yes, the answer to your comment is yes. Interestingly enough, I think that that particular fact was more so for the guys on the first round that start getting these loans when they shouldn't be getting them. They're giving them another week to kind of sit down and reassess whether they really need it. But yes, to your point, yes, there's another week. It will be interesting to see if there's going to be another round of funding for this PPP program after this one, the funds for this one exhaust. So I don't know if after that fact they'll give another grace period or not. But yes, to your question, yes, there's another week to return the money with no consequences.
Okay. So we have a couple of very specific questions. What about office membership fees like WeWork? And let's get a very brief answer to these. Do you think those would be considered rent and forgivable? Quick yes or no?
Yes.
Yes.
How important is the timing of a drawing down of a loan in terms of, like, 4 payroll periods, or, terms of greater than 8 weeks? Like, since a payroll period might be a half a month, so instead of 56 days, it takes 61 or 62 days. Do you think that matters very much?
I think that the SBA would look at the spirit of the law here and basically say, you're supposed to be using this for payroll. Are you using this for payroll? And just because you go a few days after, I wouldn't worry about that. But I would encourage people to, again, treat this loan as it was supposed to be treated, as a payroll incentive, or as a payroll protection, literally what it is. And I think you have a lot better argument for the loan being fully forgiven.
And go ahead, Jeb. Josue, sorry, go ahead.
Yeah, one thing that I wanted to add there is this has been rushed. This is $600 billion that we're just put in the market in 4 weeks, right? So there's no right or wrong answer right now. I agree with Jeb. Just use the funds as they're intended. I do know that professional organizations are writing to the SBA, IRS, so that they can give some guidance as to, for example, what the 8 weeks means. So could we put it into what payroll periods, right? So if you give me the loan today, right, but that's out of my payroll period, can we just move that to be the previous payroll period or the next payroll period? So again, so it's more practical to come up with how calculate this loan forgiveness amount. But I think that at the end of the day, if just use the that they were intended. Let's say that your payroll cycle is 61 and they stay to 56 days. You'll only be paying 5 days worth of payroll, right? That is not forgiven at 1% interest. It should be an immaterial amount, and I don't think that will be a deal breaker for anyone. Again, just make sure that you use the funds for the intended purpose. I think that's the most important thing.
And just document everything to your bank, right? So that's pay stubs, that's right, and that would take care of those types of things, right? Whatever receipts you need to have, right? Just have all the documents, right?
Yeah, everyone that runs a payroll and have a payroll service providers. I mean, these guys have come up with their own reports, right? That calculates, hey, this is how much is the loan amount that you can request. You got to review it to make sure that, hey, you agree with what they're doing, but they're already putting some templates together that are actually pretty good, and I'm sure that they will put some together to calculate those loan forgiveness amount. I mean, I already have come across a few templates of loan calculations, of our loan forgiveness calculations that are actually pretty good. Again, I think that it's going to come back to all of us that runs payroll and have payroll. Our payroll provider most likely will come up with some sort of report that we could use. And actually, because that's actually what we use to pay our employees, so it would be good, a good support to support the amount that we pay.
Fair enough. I guess there's one other question, and then we'll move forward. And I know there's another question that is very, very specific that maybe we'll save towards the end. Business cash flow is impacted severely, but profits are on an accrual basis or not. Any thoughts on how that would affect, on what that would be and how that would affect forgivability?
Well, I think that forgivability, again, we're talking about the amount of payroll costs incurred since the loan was provided. So, I mean, even if you're on a cash or accrual basis, that's when you start, right? So if we receive the loan today, that's when we start calculating our payroll costs for the next 8 weeks.
Fair enough.
Okay.
Thanks.
Again, what I think that as I was saying, the ASCPA has provided some guidance, like some recommendations for guidance to make it easy if you receive the loan outside a payroll cycle.
Fair enough.
And that's where then the accrual versus the cash basis commingle in. But if you ask me right now, what will be my question? My answer is, based on the letter of the law, it says that it's 8 weeks from the day that you receive the funds. So that's when you should start counting your payroll costs as of now.
Very good. Thank you. I want to move forward a little bit. We've talked so much. I'm sorry, Jeb, you're going to add something?
I would agree that it's really looking at the from the date of the receipt of the loan, what the payroll costs are, and it's less concerned with profits. You know, you could have costs go, you could have revenues go through the roof, or revenues drop to zero, and they're still looking at costs. They're not looking at profitability.
Fair enough. So I guess the next question really has to, we've talked so much obviously about the business side of the CARES Act and PPP, and that's why so many people are interested in. But there are also obviously other elements of the CARES Act, the $1,200 direct payments to people who qualify. Where do those stand at this point? I mean, some people are getting them, some people aren't. Some people, if they're getting ACH, maybe they're getting them. Where do they stand?
Well, if you ask me, I mean, in my experience, some of my clients got them, some of them haven't get them. I got a lot of family call me, hey, I haven't received the funds. I did receive the fund, thanks. There's a website that the IRS have provided to go in and check the status of your refund, or your rebate, sorry. I think it's mixed reactions there. I think that at the end of the day, everyone that is supposed to receive it will receive it. Timing, as regards to time, I do not want to venture there because I don't know. Right? I really do not know when the timing will be. I think that what the IRS was given was a monumental task about, hey, just come up here and distribute this over 80, 90 million people in a certain amount of time. So I think they're trying their best. And unfortunately, I think that everyone that it's intended to receive that check will want to receive it as soon as possible, because we're all feeling the economic pressure that this pandemic has provided to all of us. But I think that at the end of the day, everyone that is meant to receive the rebate will get it. But I wouldn't venture as to when they will receive it. I don't know, Jeb, if you have any views on this.
No, I think the federal government's been sort of, and I don't want to get political here. I realize that's not the point, but I think they've held their cards pretty close to their chest here. Other than to say that, the most interesting part of this program is that so many New Yorkers who might be, living paycheck to paycheck don't qualify because they make too much money. I mean, it's not adjusted for COLA or anything like that. And it's, specifically targeted to certain people. But I don't want to take any political position on that.
One of the other provisions of the CARES Act has been increased unemployment insurance. So basically saying the federal government's going to throw $600 a week at those who have been laid off or furloughed. But obviously with 30 million people laid off over the last 6 weeks, we've heard about major backlogs, and especially with over 1 million people laid off in New York. Further, even Governor Cuomo has come out and said freelancers and independent contractors have been at the back of the line to receive benefits. And then you add on top that California and maybe New York, well, California already has had to borrow money from the federal government in order to pay benefits. New York is, Cuomo's getting up and pleading, and this is not a political statement, just basically saying pleading, inability to pay these things. Any updates on, or any thoughts on where this might go over the coming weeks for those and months for those who are affected the longer this goes on? Jeb?
I'm sorry. Repeat the question part.
Well, just any thoughts or questions about, what on the status of unemployment benefits and how those are likely to continue based on your knowledge, your professional knowledge of where these things are from a funding perspective, either federally or statewide.
Yeah, so the federal unemployment has been unusually generous. And I think, just an interesting anecdote there. I was speaking to my business partner an hour ago, and we have concerns that we're going to have trouble rehiring some of the employees that we furloughed because the unemployment has been so generous. That being said, there's been a lot of discussion about how inefficient the system has been run or how difficult. I mean, you've never seen anything like this. There's no historical comparison. Both from a perspective of in the 1920s, you didn't have the you didn't have the internet, so you had literal unemployment lines. Here, you're probably hitting a higher percentage of people than you would be if you were, if you didn't have such great technology. But my advice to anybody who wants unemployment is go online at about 3 a.m.
Yeah, and to add to Jeb's point, I've experienced the same thing. A lot of people trying to get the unemployment, getting frustrated because they cannot get in. I agree with Jeb. Go at the odd hours. Hopefully you'll get more success getting your application in. And another interesting comment when you were referring about the furlough employees, Jeb, I was on the phone yesterday with one of my clients because he received the PPP, so he's giving away the offer letters again to his employees, and one of them don't want to come back because she's getting more on the employment that they will get on if they were employees, and he wanted me to be part of the conversation with the certain employee. Listen, the problem is, once you get the offer, I mean, that immediately disqualifies you to receive the unemployment benefits.
The only difference is I think most of these unemployment benefits are 12 weeks long, whereas in normal times, certain unemployment benefits are like up to 26 weeks long. So there is that incentive to, seriously consider going back to work.
Fair enough. So Josue, I want to shift this question more to you, but of course, Jeb, you feel free to chime in. In a topic near and dear to my heart, what can you share about the special rules from the CARES Act about taking money from retirement accounts? So hardship withdrawals, required minimum distributions, even 401k loans that people might be using or need to use in order to get through this time. And while you and I were having this conversation before, Josue, not that we know anybody who's doing it yet, but if this is really prolonged and people aren't earning money for 6-9 months, that might become something that happens towards the end of the year. So this might be good for some people to think about if necessary.
It's an alternative that it's out there, right? So for someone that even as you said, they're probably economically solid, but who's economically solid to withstand this for 6, 7, 8 months, right? And they have a healthy retirement account. So the CARES Act have provided for to get rid of the early withdrawal penalty, for people to get money out of their pension plans without paying the 10% withdrawal penalty, and get access to up to $100,000. That's pretty generous, I think. There's some caveats to that. So if you get the money out of your pension plan, you will have to include it as part of taxable income over a period of 3 years. But again, you have access to that money without the 10% penalty. There's also some safeguard there. So if you withdraw the $100,000, but you pay it back in a period of 3 years, it's going to be treated as a rollover. So you won't end up paying any taxes on that withdrawal. So I think that's an alternative for people that are, again, as we discussed, probably financially solid, but there will be a little cash trap in the next few months if the thing prolongs for a bit.
Jeb, any thoughts on that from your perspective? I mean, have you dealt with anybody who's been asking you about that from their businesses or anything like that?
I've not dealt with that particular issue. I think it's a very, there's a lot of different layers to that issue, including the fact that the market is not at all-time highs right now. So there's a lot of different moving pieces when you consider such a drastic move as borrowing against your retirement.
Fair enough.
Very good point.
And of course, I think it's always best that you talk to whoever your
Here's my
advisors
advice.
are.
Talk to Russell.
Yeah,
right.
This
talk
is a Russ.
advisors.
This is Russ.
I got to talk to you too, Josue. This is a big tax issue. This is a big tax decision people have to make. So they have to talk to their tax advisors as well, especially if they want to repay it or figure out how to structure how they can repay it, right? That would make a lot of sense for them to do.
Yes.
So it's not just for a financial advisor or a planner like myself, but it's also obviously for other advisors as well.
And I will add one thing from my area, which is that retirement accounts are generally completely exempt in a bankruptcy case. So if you are in financial distress and you're concerned about keeping as much of your retirement accounts as possible, a good way not to be able to do that is to diminish your retirement accounts, by borrowing against it, because then that money, once it becomes non-qualified money, it's fair game for distribution to creditors in a bankruptcy case.
Thanks. That's actually a layer that often gets overlooked, and I thank you for bringing that up. Unfortunately, also due to this crisis, some people will be dealing with legal changes that come from the Secure Act, which got passed in December. While I'm tooting my own horn, written about some of these changes on my blog and some possible tactics for dealing with the changes. What's some of the advice you've been giving to your clients about dealing with this new law? Particularly as it comes to tax or business planning, right? I mean, go ahead. I think we might also need a little background on what it is. It really never got too deeply into it because it all of a sudden happened in December, and then in February we were on to this new thing, so nobody really talked about it much. Josue, Jeb, whoever wants to jump in.
Go ahead, Josue.
So I honestly haven't had a lot of time to sit down and review how it's going to impact, to be honest with you. So really not a whole lot of insight that I can provide there. Me, myself, I usually don't deal as much with the Secure Act. So there, I wouldn't have much to add.
you have anything?
Yeah, I would rather not.
So I got to talk about the Secure Act. Is that the idea? So basically, it for people who pass, if you know, and obviously, you know, if somebody who passes, right, and so we could just kind of talk about this and go from there. If somebody passes, usually you take an IRA or a 401k and be able to stretch it out over the course of the beneficiary's lifetime. So, you know, a parent leaving it to a child would be able to do that. The main portion of that act is essentially that now you can do that only over 10 years, but instead of having to take a mandatory distribution every year, you could just take it all out in one lump sum at the end. And so you have to do tax planning and all of that sort of stuff. And I could see how that might be an issue for business, Jeb, because if you get left shares of a closely held business or something like that. So I don't know if those are issues from a general perspective you've had to deal with. And that's why I brought it up to you, because you've talked to Josue about so many, talk with so many businesses, at least in your career. You may not be talking about it now, I know, but so these are things that, sorry, I'm going along. I'm supposed to be interviewing you guys. But so sorry if you guys weren't.
I think people want to talk about PPP.
We're going to get there. We're going to get there. We're going to get there in just about 1 second. I want to make sure I get through all of the questions. But yeah, I guess we'll take this opportunity to get back to PPP. So going through some of the questions we have, Josue, the most recent thing I can think of that you got is, if I try to hire an employee but they refuse, does this impact the ability to have 100% of loan forgiven?
That's a good question. As a matter of fact, there was some guidance out there this weekend where it says that, hey, if someone, me as an employee, an employer, try to hire someone back and that person refuses to take the offer, and you can document that, hey, they did refuse the offer, that is taken away from you when you calculate the amount of loan forgiveness. That's recent guidance. That's a good question.
Yes, but if they have another person hired in their place, I don't think that would be a problem. You know, at the end of
True. That's true.
At the end of the day, it's the aggregate number that they're looking at, right?
Yes. No, that's true. But again, if you try to hire someone back and that person refuses the offer, you're not gonna get penalized for it.
Correct.
Very good. So another question: if you can't get PPP, can you still apply for a 7A or other normal SBA loans that existed before the coronavirus crisis?
Yes. The only thing I would say right now is that the SBA divisions, unfortunately, we learned more than you want to learn about how banks work. And it's sort of like in New York City, where we're all located, you have surgeons who are doing emergency room work right now because of the proliferation of corona cases. You have every single SBA employee is focused on the PPP right now. So you can expect to not have, or for the most part, lots of them are. You could expect that it's going to be a pretty inefficient process, but they're still obtainable. Now, remember that those are on 90% of the time, 95% of the time going to be recourse loans where they could come after you personally if you don't repay them.
Yeah.
Another question. I've seen loan documents, and a lot of the time those documents are very confusing. Have you seen these loan documents, and when would be a good time to involve a lawyer, accountant, or investment advisor? When my business applies, or at the point when I'm being asked to sign them?
Frankly,
I'd say the earlier the better. That would be my thing since you mentioned investment advisor, but you guys?
No, I mean, I think you might end up needlessly paying some legal fees, you know, or some legal retention, if you hire somebody before you have the document in front of you. You know, you can line somebody up, but I wouldn't necessarily pay money because there's still a real chance that you're not going to get the PPP. Now, I would caveat that with the fact that, you know, some lawyers have really good relationships with certain financial institutions, which could help move your PPP loan application along. And I can't overstate the importance of that. I mean, I had a consultant reach out to me today, friend of mine, and offered to introduce me to a banker. And I said, you know, thanks, but no thanks, but I sure have somebody else who wants to talk to you. So to the extent that you have businesses that don't necessarily have strong relationships with the types of banks that are having the most success, and by those, I you know, we got into this a lot the other night, but you know, I'm talking about smaller banks, regional banks, community banks seem to be having more success anecdotally than the JP Morgans of the world. I think that lawyers and financial advisors can be great resources for making human connections there. But in terms of, you know, review of legal documents, I actually think the need for a lawyer is not as crucial on the early term. I mean, I think that I found them to be pretty straightforward documents.
Fair enough. Just wanted.
I read a lot of not very straightforward documents, so.
Got a couple more questions here, but I just wanted to at least to share with everybody the results of the poll if they haven't already seen them. We have 6 people who at least have voted. 5 have applied. 1 has not. And 4 of them went through large national banks, 1 a regional bank, 1 a community bank, and half of them have been successful in getting loans. So, you know, I don't know any who are necessarily in process or, you know, but I know, Jeb, you and I the other night, and Josue, I don't know if you've heard about this, but I've also heard about people going through multiple lenders. We talked about alternative funding sources before to try to move along a loan that is in process and not being pushed through. So that, like you said, going to PayPal, Josue, and this is supposedly completely okay. I don't know if you've heard the same.
Yeah, so my experience with that is sort of interesting. The intimation during the first round was, you know, no, you only apply in one place. Then the intimation in the second round for me was you can apply to as many places as you want, but you have to withdraw your applications. Now, what I've heard anecdotally there is even if you don't withdraw your applications, it doesn't matter because all you have to say is I haven't been funded. You don't have to say that I haven't applied in multiple places, okay? So I actually would advise people to apply in multiple places so long as soon as they're funded, they call up all the other funding sources. But, you know, this is a case, a lot of times I have clients with one legal issue or another, and I say, listen, disclose less, not more. This is a case where I would disclose more, not less. And there's an exception to the rule. When I made this connection this morning, from what I understand, the regional bank said you have to withdraw the national bank application. So this is, you know, in order for us to you know, process your application. So this is really an area where there's some lack of clarity, you know, as to what's going on and lack of consistency. That being said, I just want to offer at the end of this, Russell's going to offer our contact information or ask us to do so. I now have a regional bank that I can refer people to. So if people have clients out there that are looking for a regional banking relationship that's still processing these, I'm happy to offline provide that with no guarantees.
Yeah. One thing that I wanted to note is to add to Jeb's comment. Yes, I think that the first round, everyone was confused. 1 application per person. I think that a lot of people got frustrated by the first round and not getting the funds, and they started getting more flexible about applying in more than one financial institution. One thing that I did see is, because it happens to some of my clients, that they got the funding from one financial institution, and when they were going to withdraw their application from the other financial institution, it was already declined. So the SBA already declined the application right off its face. We don't know why it was a decline, but we are assuming that, hey, they already know that you already received the funds, so they just decline it on the
That was
second one.
anecdotally, that was the story I heard, right? Is that somebody had something and then they went and made it after waiting, went to a secondary institution, and they were basically instantly declined because while the customer didn't know it, they'd already been approved at the other institution. So since basically it matched up on TIN or SSN or whatever it might be. So that I've heard the same. Just one last question, it looks like here from participants. Should PPP loan applicants review their existing financing arrangements to see if taking on further indebtedness would create an issue under other prior financing arrangements? For example, if it was not forgiven, would it wind up being an obligation liability on the books of the company, which could end up being a problem for the company with their other lenders?
Of course.
Yeah. Yes.
Yeah, of course. I mean, I can say this. So to the extent that it gets forgiven, it's not a loan. But if it doesn't, it is a loan and it goes to your books and you will have to repay that loan. So you will have to discuss with your other lenders to make sure that, hey, you still meet those financial covenants that you have agreed with them. Again, the terms of the loan are very favorable. It's 1% or whatever is the principal, but you need to keep in mind that you have to repay it in 2 years as well. So it really becomes a liability once for the portion that doesn't become forgiven, and you may want to have a discussion with your bankers to make sure that you still meet those financial covenants to keep your lines of credit and whatnot. My guess is that they will probably be a little more flexible, but again, that's not my decision. It will be the bank's decision.
Quickly, Jeff.
Yes, and I happen to know the questioner here, and I think he's a very good, thorough corporate lawyer in New Jersey and New York, and I think he's made a good argument, sort of against my point earlier that this is an issue where you might want to at least talk to a lawyer. It's just, whether I would retain them to review documents or not, to review the SBA document, I certainly wouldn't do until, you have the document, but it might behoove you to retain, if you have secured debt or you have other small business loans, this would be a good opportunity to review those, make sure that it doesn't trip a covenant in those loans. That being said, I would imagine that given the COVID situation, just again, the unforeseen, unmatched situation that we're in, that those covenants are not going to be strictly enforced, that courts are going to say, look, I get it, you tripped a covenant, but this is, sort of excusable in this type of economic environment. I don't know that for a fact. That's just my guess that the courts are going to be pretty equitable there.
One last audience question, and then I have one final question for the two of you, and then we'll close it out. Is Treasury looking at company financial situations? So for example, if a company has cash available or an untapped line of credit, could that be a problem for a company taking the funds?
No, they're not looking at that from what I understand. And I would also say that goes to some of what happened during the first round, where you had these huge, the hugeness is another issue, but certainly highly successful public companies obtaining these loans because they didn't, it wasn't a requirement per se that you're doing poorly, or that you did. It actually was a requirement that you had an actual need for these loans, but it wasn't a requirement that you disclose financial information.
Okay. Josue, anything to say, or should we?
Yeah, and so I think that's was the big takeaway from the first round, that, hey, if you have alternative sources of funding, you need to make sure that, you don't tap into this if you can easily get other funds. I think that's the question about having a line of credit. I don't think that by itself will disqualify you for taking this loan, because I mean, again, this is just, I'm doing so poorly right now. I want to make sure that I have money to retain my employees. I mean, I want to have my line of credit for other capital needs, right? For other working capital needs, and not necessarily to pay my employees. So I think that you have to look at all the facts together to see if really that will preclude you or not from taking the loan.
All right, very good. Thank you both. So one last question outside of this. So we try to take the end of the show to look ahead, see what changes might come out of this crisis, how the landscape might be different, how people might react differently. As business owners yourselves, aside from the obvious short-term changes regarding distancing and the like, what do you think some of the long-term effects will be on clients in your sphere?
I'm an optimist, so I actually believe that I'm decently positioned as a bankruptcy attorney. I believe there's going to be an uptick in filings because people are squeezed. And I just relish this opportunity to help people in a difficult financial situation. On the other hand, and this one is maybe a little bit less obvious, I think people being cooped up and maybe letting their self-care go by the wayside. I think when I'm able to be fully operational again at my fitness recovery studio, business will be okay.
I think that we will recover. But the landscape is going to be wildly different, I think. That thing about having an office and showing up to the office every day, I think it's going to be a thing of the past. I think that hopefully this whole experience will take us to more flexible working arrangements for that people that may need it, and that now that even employers have had the chance to see, hey, you know what, it's working. I mean, to the extent that you have the cash and you can still run the business, I'm sure that you're still running your business. But I think again the landscape will be completely different. Some industry will have to rethink themselves. Obviously, I was speaking about the hospitality and restaurant business and the tourist industry, but I think that we will come out of this stronger. It will take some time, but I agree with Jeb. I'm an optimist, and we'll tackle this together. I think that all this crisis has shown us that, hey, you know what? We are good human beings. Everyone, for the most part, have been working together to tackle and adhere to the rules of social distances to make sure that we contain this pandemic. So I think that has truly shown that we as a nation have been, everyone is working towards the common good. And I'm sure that after all this passes, all of us will work to getting our economy back together and prosper.
I thought I was answering the question from a personal business perspective. I think everything is going to change. I think real estate is going to be incredibly hard hit. I would advise anybody to, think really hard before taking on a real estate contract, whether a lease or a, purchase or sale right now. I mean, maybe, and I hate to say this as a homeowner, but, I don't necessarily see this market going upwards anytime soon. And I think from an office leasing perspective, and I work with plenty of I do some office leasing work on the legal front. You're gonna have a very tenant friendly market here, and you're gonna have an unbelievable amount of vacancies in New York City.
Well, thanks for that, and I appreciate it. I know there are all sorts of changes that are coming our way, and again, hopefully we've helped you all think about obviously what you're trying to accomplish now with the PPP and what you're trying to accomplish going forward. We are coming up across the top of the hour, so how can we reach you, Josue?
So everyone, you can thanks again for the time. You can reach me at my phone number 646-945-6259, 646-945-6259, or to my email josue.rivera@riveramontespllc.com. Thank you.
Jeb?
Singer at singerlawgroup.com. That's spelled as it sounds, Singer, Singer. And my phone number is 917-806-5832. 917-806-5832. Call me anytime. I'm incredibly accessible, and we'll call you back if I missed you.
And thank you both. And once again, I want to thank Jeb Singer and Josue Rivera for joining us today on Discuss with Russ. If you'd like to reach me, you can reach me at Russell, RUSSELL.Rivera, RIVERA, at voicewealth.com. That's russell.rivera@voicewealth.com. Or give me a call at 646-630-0980. My hours are always extended. Basically, if I'm not asleep, I'll take your call. We will be sending a follow-up email with the link to the recording, and it will be also available at www.voicewealth.com/blog. It's going to be on our blog page within a week. Or you can view all of our videos from Discuss with Russ on the Voice Wealth Management YouTube channel. Next week on Wednesday, May 13th at 2 p.m., not 3 p.m. as this time, we will have Mitch Lippman of the Mitch Lippman Group to discuss business continuity and operational resiliency. If you'd like to register for either of those webinars, you can reach out to me again at russell.rivera@voicewealth.com, or check out your email inbox. Should be there tomorrow morning. And if you don't get that, again, just reach out to me. So thank you, Josue. Thank you, Jeb. Thank you, all of you, for watching and listening. We'll see you next time.
Be safe, everyone.
Thank you.